George Salamis, President and CEO of Integra Resources. Really excited to talk to you all today about our great PFS study that we put out overnight, our first ever PFS for the DeLamar Gold and Silver Project in southwestern Idaho. Before we launch in, I just urge you all to do a couple of things here. Have a look at the news release. There's some great amount of detail that went into that news release. It's a bit of a monster, 20 plus pages. I do admit that. Also have a look at our cautionary statements, which are coming up right here, right now. So there we go. Before we get started on the project and the specifics of the PFS study, I thought I'd take the time to really start with what the benefits to the US and the benefits to Idaho are, as demonstrated by this PFS study. So at the peak of operation, DeLamar is going to employ a lot of people, over 300 people during the course of operations on site. It's going to employ probably more than that during the construction phase when you add in the contractors, et cetera. So it's going to be a pretty significant economic generator for the state of Idaho, Owyhee County, and the state itself. Also as important, one thing to bear in mind here, this mine is going to produce about 3.1 million ounces of silver in addition to gold, annually, of course. And silver is a pretty big generator when it comes to the electrification of the US economy. It's something that's a stated goal for the US, and it's going to be a big contributor. As you all know, silver is a pretty big component of electrification in the new economies to come. Last but not least, everything that you'll see in this presentation has really been done with the maximum of sustainability driven initiatives in mind when it comes to things like Railveyor, which I'll talk to you about, the solar power, the LNG power that's going to go into this project. Really, everything was done with sustainability in mind, reduction of the use of fossil fuels, et cetera. So more on that a bit further on in the presentation. I'm just going to jump to some of the key highlights here. Maybe start off with the broad statement, the mouthful of our headline for this news release. Integra completes heap leach and mill pre-feasibility study for DeLamar project with an average annual production of 163,000 ounces of gold equivalent for the first 8 years, and demonstrates project optionality with phased development approach. Yes, that's a real mouthful, but you quickly see what I mean. The key hallmark to this project really is optionality in inflationary times. So what we presented here in this PFS is a project with a phased development approach to be built in 2 stages. First off, the heap leach, and secondly, from that cash flow from the heap leach, we build the mill. So picture a project, a precious metal project, where we don't have to build the mill straight out of the gate to get to a really fantastic level of production on this. We can start generating cash flow really quickly from gold and silver production from the low-cost heap leach. And that's really what DeLamar is. It's all about that optionality. So the project, the PFS, is showing pretty robust gold production, as I mentioned, 163,000 ounces per annum for the first 8 years, and then 110,000 ounces per annum over a 16-year mine life. So it's a really long life mining operation, and that's another key difference from the PEA. So in short, what we have is a really robust production profile here with a long mine life attached to it. In terms of CapEx, I know a lot of people are worried about CapEx these days. On all projects, CapEx blowouts, the pre-production CapEx for this project is low, and the capital intensity is low. The project can be built in phase 1 for $282 million, which includes about 20% contingency. And then we take the cash flow from the heap leach and build the mill and scale up. That's essentially the plan. This time around in the study, in the PEA relative to the PFS study, the PFS study is far more leveraged to silver. In fact, a lot of our revenue is going to be derived from silver. 35% of our average annual revenue will be from silver. So it's going to be a big component. And when you see projects that have crossed that nexus of 20 or 30% silver as a revenue on a byproduct basis, they tend to attract a premium valuation. And that's the expectation here when we build and start operating this mine. And then last but not least, I talked about these sustainability-driven economics. Everything that we looked at for this project was really focused on every method that we could input into the development plan that not only was showed the maximum of sustainability, but also showed the maximum of profitability. In other words, if it went into the study, it had to make money at the very least. And so what you'll see is a lot of sustainability driven initiatives that really have really strong economics tied to them. Just to focus in where we sit, northwestern Idaho, we've just flashed right by there. And just kind of diving in to the two primary resource areas, I should say reserve areas. For the first time, because of this PFS, Integra is allowed to basically quote 2P reserve, and that's because we did a PFS study on this project. So the two focus areas, obviously, if you know the story, DeLamar to the west and Florida Mountain to the east. In terms of what you're seeing here is a breakdown of the reserve model, not the resource model, but the reserve model, de-risked. The red blocks in both cases are reserve blocks of gold and silver, which are fair game when it comes to heap leaching. And the blue blocks that you'll see here, and we'll look at some of these in more detail, those blue blocks are gold and silver sulfide reserves that are fair game for milling in the context of this PFS. And that's another thing that's really new in this PFS is the 2P reserve for the first time. So we're looking at about 1.8 million ounces of gold in this PFS at a reserve category. At an average grade of 0.47 grams per ton. And we're looking at 92.4 million ounces of silver reserves at a 23.27 gram per ton silver average grade. So, a lot more, let's just say gold and silver went into the mine plan this time around relative to previous studies that we've done. And that's a pretty important thing when it comes to sort of production profiles and longevity of mine life. And so that's kind of what's different in this study. So here you have a view of our production profile. As I said, a 16-year-long mine life, 163,000 ounces a year on average for the first 8 years, and then over the life of mine, 110,000 ounces of gold equivalent per year of production. Now, as I mentioned, this is an operation that's not going to cost a lot of money to build. $283 million is the initial CapEx for this project in an era of extreme CapEx, if you will, because we don't have to build a mill straight out of the gate. That really serves us well. In an inflationary era, that's a really important factor. Another important factor is obviously the leverage to silver. And obviously, this is going to generate a lot of revenue from silver. In terms of the life of mine, gold equivalent co-product calculator derived all-in sustaining cost, we're looking at an average of $9.55 per ounce of gold equivalent. And that puts us in the lower quartile of world average all-in sustaining cost, which is a great place to be if you're a gold producer. Just moving to the next slide here, I'm just going to tee it up. Starting at Florida Mountain, which is really where we start our production life as a producer per this PFS study. What you see here is the block model. I'm just going to kind of spin that around just to give you a look at what that looks like. And again, the red resources are the heap leachable reserves. Sorry, the red blocks are the reserves. I've been so used to saying resources for the last 4 years. It feels good to say reserves. And there's the blue blocks, which you see there are the sulfide reserves, which are part of this mine plan. And by the way, one thing to note here is that our viewers will recall, if you followed us for a while, we've announced a lot of high-grade gold and silver intercepts from beneath Florida Mountain, none of which were input into the study. So that represents an upside case. More on that later. And so this is what Florida Mountain looks like as a drone view, looking at it basically side on, exactly what we saw in the digital realm on the last slide. And I'm just going to rotate things around. Now we're looking at Florida Mountain to the west, essentially towards where we propose to put the processing plant infrastructure, and where DeLamar is, essentially 8 kilometers to the west. And so I'm going to go back to the realm of the digital world. And now basically what you see here is that same view looking to the west, but now you're seeing some of the planned design infrastructure per the PFS that we put out just in the last 24 hours here. And I'm going to go into a bit more detail on that. So first question, how are we going to get the ore from the open pits to the processing facilities? And so what we're looking at doing with that is using a system called Railveyor, which is a pretty interesting system. It's used at several mining operations around the world. Like Agnico Eagle uses it in northern Quebec. We saw it in action a few years ago. We were quite intrigued. Interesting thing about the Railveyor system is it uses a light rail system with basically it's a light train system to basically transport the ores, gold and silver, from one point to another. The beauty of Florida Mountain relative to the plant site, Florida Mountain is high, so it's a downward haulage along this Railveyor track. It's going to actually generate power for us for the project, which is quite interesting. But there are some other real benefits, tangible benefits with respect to Railveyor. One of them is it's related to far less greenhouse gas emissions as compared to, say, normal diesel truck haulage. This Railveyor system, for example, it's going to save us from buying and using, in fact, over 5 haulage trucks, perhaps more than that. So lots of benefits there, lots of benefits for noise reduction, lots of benefits for dust mitigation, which is obviously a big thing on mining operations, and reduced amount of water. We won't have to suppress a lot of dust because we've got fewer haul trucks going up and down that road. And so that's a real benefit. But you can see there in yellow, the Railveyor system that's going to be used to convey ore from Florida Mountain to the plant site, and as well from DeLamar to the plant site. And I'm just going to jump to the next one. So basically following the ore from the pit, obviously it has to be crushed, and this is a view of the primary crusher situated near an area called Jacobs Gulch, basically in between Florida Mountain and DeLamar. And so have a look at the news release regarding sort of the primary layouts of crushing and milling facilities that we go into a lot more detail than I'm going to go into today. And then so from the primary crusher, we go to the coarse ore stockpile. And from there, we go to the fine crushing circuit. And then from there, we go to the SAG and ball mill combination and the flotation circuits that you see there. Again, all the specs related to all of this milling equipment that's going to be processing sulfide gold and silver only. It's all in that news release that we put out earlier on today. And then finally, we get to ending up at the Merrill-Crowe plant and refinery to produce the final gold and silver in doré form. This is where kind of the magic of the mining operation happens. So all of this has been designed in and around a sort of centralized facility in the area of Sullivan Gulch. And you'll see everything's pretty much compacted into one area to mitigate a large footprint, which is to benefit of everybody. So what we see here is the real first mover, the first money maker, if you will, pretty serious money maker. At that is the heap leach. This is kind of where everything happens, where the magic happens at Jacobs Creek. And again, just to reiterate, this is the beauty of this project. Really, is the heap leach facility that you see here allows us to get straight into production without having to build a really big mill facility to process ore and get into cash flow from extracting gold and silver. We get there with this mill. In fact, with this heap leach rather. In fact, this heap leach on its own as a standalone produces about 135,000 ounces a year of gold equivalent over about a 7-year period. The all-in sustaining costs on a gold equivalent co-product basis are about $813 per ounce. So really low, great margins on this heap leach, a great basis to start off, really low risk basis to start off of production, low CapEx, which then pays for the mill expansion should we decide to go down that road a few years later. Now, you might be asking, how are we going to power all this? Yes, there is a power line into site, not big enough for our purposes. We'll use some of that grid power, but it would need to be expanded because we've obviously have a much bigger power demand relative to the PEA with all of this larger infrastructure. So this is what we're looking at, a more sustainable means of power generation on site relative to what grid power could provide us. So we're looking at a combination of solar power, LNG power, and a microgrid, basically to supply all of our needs that we're going to be using going forward, be it for heap leaching or for milling. And obviously this comes with tremendous benefits when it comes to reduced carbon footprints, much lower sort of rated emissions relative to what grid power would provide. I think it's about 13% by memory relative to grid power. It's a far more sustainable alternative relative to grid power going forward. So just to summarize and end off with the sort of the PFS development and operation sort of layout, we believe it's super critical, especially in this inflationary environment that's taken hold here, and who knows how long it's going to last. Having a multi-phase development scenario when that you can make decisions to expand or not based on the prevailing economics of the time is super helpful. My experience in the production game is such that I remember how critical optionality was in terms of various means of sourcing and developing ore bodies, super critical to the mining function. It's not just key to the economics, but it's really key to the survival of a mining operation. And I've learned that the hard way, and I've learned that the easy way in various mining operations that I've been part of around the world. And having all these options at your disposal is super critical. So that's what I believe that we presented with the DeLamar PFS study. So getting to probably what is also one of my more favorite parts of this presentation is the upside scenarios. And, as an explorer at heart, thinking about the upside potential on how do we take a really strongly economic project and make it even better is always also front of mind to me. It's kind of a hallmark of the Integra brand, if you will, a favorite thematic. So how can we actually make this really strong project even better? And so one of the ways is by recovering more gold and silver. And so the test work that we've done with the Albion process so far is really showing a lot of encouragement on that front. A lot of the future economic returns of this project could be driven from enhanced gold and silver recovery. For example, an ore body such as Sullivan Gulch has a great silver recovery, a pretty average gold recovery. According to the test work that we've done using the Albion process, it can potentially recover, plus 80% gold and plus 80% silver. Subject to further test work, maybe that's what we'll see in future development designs of this project. I would not be surprised. One of the things about Albion, and yeah, it's well known, it's a process that was developed by Glencore. It's used at various operations around the world to recover precious metals and base metals. Doesn't involve a lot of pressure oxidation, doesn't involve any pressure at all. In fact, it's atmospheric pressure, oxygen introduction, and ultrafine grinding. I'm simplifying there, but that's basically what it looks like. It's a really solid means of really amping up gold and silver recoveries on the project, has the potential to tremendously boost the economics on this in the future. And so where could we look at finding more sulfide ores at Sullivan Gulch? Well, here we go. Basically what you're looking at here is the open pit at Sullivan Gulch on the DeLamar project. You can see up here the oxide and transitional material, which is fair game for the heap leach, and everything else that's blue is basically sulfide gold and silver. Well, you can see the amount of sulfide gold and silver that comes in to the open pit at Sullivan Gulch. There's actually a fairly large amount of it. In fact, I think we added over 500,000 ounces in total of sulfide gold and silver from DeLamar, all of DeLamar, as a contributor to the mine plan. But just take a look at how much of this blue doesn't fall out or does fall outside of the open pit. And that's because the recoveries are such that it doesn't make it economic to drive the pit downwards any further. So think about an extra 30 or 40% gold and silver recovery from the sulfide ores. What happens to all of that blue material? My guess is it probably becomes really economic to mine, subject to further test work, obviously, by the way. But just going to consider, if that 500-meter scale bar is it, think about all of this coming into a resource category first and foremost, or a reserve category in the future, I guess. And then think about the upside potential. One of the things that we've, like to point out in the future with respect to sulfide upside is how much of this material is actually at Sullivan Gulch. I mean, these are big, thick zones, 100 to 200 meters thick, 1 gram to 2 grams per ton on average. They concentrate really well. And there's a lot more of this blue where it came from. In fact, from the IP signatures that we can see, this blue really lights up and it keeps going for another kilometer in the southeastward direction. Lots more where that came from, potentially, I'm not going to say it, lots more where that came from. And Albion could be a big game changer in the future to that equation. And so jumping to an equal favorite of mine in terms of an upside scenario is Florida Mountain. Now, we haven't included any of the Florida Mountain high-grade components into any part of the study. It's going to require development from underground. There's no study attached to that. But just think about what that could look like in the future when you start to add, high grades, 10 to 15 grams per ton, perhaps, kind of the average of what we've reported in the last few news releases. Think about what that could do to the overall mix. A couple of things that we do know from a processing point of view. We do know that the sulfide gold and silver that's high grade at Florida Mountain looks like it could probably suit the current mill configuration that we have in this PFS very well. In other words, we can extract gold and silver from it, we think, subject to more work. And then there's just the sheer abundance of high grades that have come out of Florida Mountain in the last, call it 3 years. I mean, we've done a lot of exploration on Delamore, specifically a lot at Florida Mountain. As you can see here, a lot of these high grade intercepts, you probably can't see those, but trust me, they're abundant. I think there are over 100 intercepts that are over 4 grams per ton over a width of greater than 1.5 meters. So potentially a lot more high grade to add to the mix, potentially a lot more high grade to introduce to future mine plans, subject to further studies, of course. But again, a very clear upside case for the project. Really looking forward to that. There'll be more news on that to come. So just to kind of highlight, just finish off basically, in terms of what this project looks like, it's 2 projects in one, lots of optionality, really low all-in sustaining costs, in fact, the lowest quartile of all-in sustaining costs on a gold equivalent co-product basis, a really low capital intensity, $282 million to start off as initial CapEx, lots of upside, lots of gold and silver, lots of upside cases to chase, and we'll be talking about more of that in the year to come. So stay tuned for more information this year. We're going to be talking lots more about drilling, which is ongoing, looking at resource expansion. We're going to be talking lots more about permitting this year, operational enhancements and future studies related to gold recoveries. And just to take a sec, last but not least, this study and everything that we do, everything that we're going to do this year, none of it could have come to pass without the excellent dedication of this great team that I work with, the Integra family. We owe it all to you. You guys have done spectacular work, and I really, really appreciate it. You did stellar work this year. Thanks a lot, everybody. Look forward to talking to you all soon. All the best.